Now, one of the others that I really would love to see is the change in the word credit card. So I would love them to be called debt cards. A fund, we talk about an emergency fund. Maybe we should just call it a freedom fund. But the reason I mention it is because I think if we do stop talking about the state pension and we talk about the state benefit, we start to look at it in a more joined up way. How is it going to be paid for? Who is really paying for it? How are we going to have enough people paying national insurance contributions to fund the state pension as it is? This is something that's a bit more of a thought piece. And there are lots of things in the world of UK personal finance that I think should be changed or rebranded for the benefit of UK consumers. If you listen to this show enough, you have heard me talk about a spending plan rather than a budget. That's a good example of the rebranding of something that could change people's perception. So a budget feels like you are constraining people and that you can't live your life, whereas a spending plan has a very different connotation. It implies that you've got some money that you decide what you want to do with it. So it's a very proactive thing where you can choose to do things that are obviously fun or things that you need to pay down debt, whatever it might be. Whereas a budget has this feeling of, oh, I'm being constrained. So that is a typical example. Now, one of the others that I really would love to see is the change in the word credit card. So I would love them to be called debt cards, because the idea is that the word credit has very positive connotations. So you get given credit, for example, for doing something, and you get the idea of credit where it's due, and all these things, they have this idea that you earn it. So, oh yeah, you can be given credit at a store in the old days, and it'd be because you're good for the payment. Really, credit is a debt, and so it means that you can't afford what you're paying for. Now, I know people use credit cards as a cash flow thing, and they may use it for things like cashback, which we talked about on the podcast. But the idea of buying things on credit via credit card, for example, when you can't afford them because you haven't actually got the money to instantly clear that credit card, I think if we just called them debt cards, then I think it would change the perspective. So every time you get your debt card out, then it would mean that you were really saying to the world, I can't afford to use this. And now I'd much rather that than people just buying things on credit all the time. Have you got your debt card or whatever it might be when you're in a restaurant? That does have a very different feel than the word credit card. And on that, I think we should change the word credit limit to the debt ceiling. So you might hear about in America, we talk about debt ceilings and there's like government shutting down because of them. But the idea of a credit limit, that again is like how much credit can you get? How, like, so it's got a positive thing, but a debt ceiling is something which you never want to hit and you want to live below. So I think the idea, if you called it the debt ceiling, it's really that this, you're getting to the point where you are borrowing too much money. So that is something I think we should change. Now, before I go on with a few others, if you're listening to this and you can think of any other ideas, then do share them. Email us, put it on the Spotify comments, because I'm always intrigued about ways we can reframe things. I mean, another one is overdraft. I think we should just call it a high interest bank loan, because it's an overdraft sounds like a minor, harmless, like kind of slip up, whereas a high interest bank loan really drives home the fact that you could be paying as much as 40% interest on these things. So rather than being a safety net, I think it then will be seen as a kind of debt trap. Another one I would change, and this is not to do with money directly, but this idea of a side hustle. I would just call it a second job. So this idea of, oh, a side hustle, when you go online in social media, there is loads and loads and loads of people selling courses about building the side hustle. I get it. I know Money to the Masses probably was a side hustle in its infancy. I created it while I had a full-time job, but I did it as a second job that wasn't paid. A side hustle ultimately ends up being an unpaid second job. So making out that somebody is going to teach you to do something amazing, it romanticizes the idea of you just working really hard to do something that could potentially blossom into a second source of income. So calling it a side hustle, everyone should have one. That is just the same as saying everyone should have a second job. Other slightly softer ones, emergency fund. We talk about an emergency fund. Maybe we should just call it a freedom fund. So it is often used to be able to help you with emergencies in terms of bills, but it also could be used to help you walk away from something in life. So an emergency fund could help you, let's say you lose your job. So you've got 3 to 6 months earnings within the fund, and if you can pay your bills. But maybe if you had a job you didn't like and you had a boss who was bullying you, it empowered you to move away from that. So it could be more about empowerment rather than just disasters, and therefore it might encourage people to build it a little bit higher. Premium bonds, maybe we should call that the government lottery, because it really is just a lottery of sorts where you could potentially win a prize. And we did a whole podcast on this and looking at the numbers. We'll put a link in the notes of this show, but there is no guarantee that you will actually earn any money. Yes, the more money you have invested in premium bonds, the more likely you are to win a prize, and the more likely that your amount of prize money will start to morph towards that overall rate of return that is quoted. But it still is a form of lottery to all intents and purposes, but you are likely to have your value of your money eroded by inflation. Another one that I would change, and we're leading up to one in a minute, which was caused a stir online when I wrote about it this week. But this one, student loan, I think we could just call it a graduate tax, because that, again, is how it works. So when you have a student loan, you have to pay it back when you graduate, once you earn above a certain amount of money. And then after 30 years, it could be as much as 40 years, the amount is written off if you've not paid it off. But what it does, it can end up working out to be a 9% additional tax rate on your earnings. So while that could be deemed to put some people off, but it may make people realize that if you go to university and you earn more money, you're repaying it back, because you're earning more as a result of hopefully earning more as a result after going to university. Now, while that may put some people off, that they are going to have to pay an additional tax for a significant portion of their life that other people won't have to, it may also help some people to frame it as a reason to go to university, because you only pay it if you earn more money. So you don't have to pay this. If you earn more money, hopefully you will do if you go to university, maybe you'll get a better job, then you end up paying this additional tax that you wouldn't have had to pay if you didn't. But it does mean that people understand more about how it works. And I think this leads on then ultimately to the one that I would really change, and it's the state pension. So I would get rid of the term the state pension, and I would just call it the state benefit. And this would probably cause a massive uproar. This week, I put something online which explained how the state pension works. So when you pay national insurance contributions, it pays for a host of things, but it pays also for the current state pension of pensioners today. So if you're paying national insurance contributions now, it's not going into a pot for you in the future. There is no pot with your name on. There has never been pots of money funded by national insurance for pensioners to claim when they get to state pension age. If you want a visual representation of this, just imagine that as somebody who's paying national insurance now, you are filling up a cash machine for today's pensioners to go up to and withdraw from. All that happens when you reach state pension age is you stop paying national insurance contributions. So you leave the queue of people filling up the machine and you go and join the queue of people withdrawing from it. Now, there are a lot of people who will hear that, who are young, will be gobsmacked, and they'll suddenly realise that they haven't got a promise of a state pension. But more importantly, the state pension is defined as a benefit. It's not an entitlement, it's a benefit, and it can be withdrawn. And there's talk, we've done it on the podcast before, where the state pension is unsustainable and could potentially be reduced or the state pension age pushed up. So more importantly, many people won't like this, but if you are claiming the state pension, you are actually claiming benefits. I see a lot of people who stereotype what people look like who claim benefits. There's all sorts of benefits out there, but the state pension is defined as a benefit. So in one sense, as a society, we have a population, or a large part of our population, who are reliant on benefits. But also, if you are somebody who may be claiming the state pension, you shouldn't judge other people who are receiving benefits of any kind, because you are too. And you may say you've paid in all your life, but that doesn't matter, because all you did, your national insurance contributions funded the pensions of people who were elderly when you were of working age. It's exactly what's going on now. So everyone who's paying national insurance contributions now, who are of working age, are funding the state pensions of people who are now claiming the state pension. That's the way the system works. People might not like it. If you don't, that's one reason why you should vote. But the reason I mention it is because I think if we do stop talking about the state pension and we talk about the state benefit, we start to look at it in a more joined up way. How is it going to be paid for? Who is really paying for it? How are we going to have enough people paying national insurance contributions to fund the state pension as it is? So what we do by changing the name of it from the state pension to the state benefit is we'd remove this sense of entitlement and replace it with the reality of dependency that older people have on society. But it would also encourage people who aren't yet at state retirement age to be more self-reliant when it comes to funding their pensions and funding their future retirement. I know that I'm probably going to get a lot of stick for doing this piece and saying to people what the reality is, but don't shoot the messenger. When I did this online, I actually did a meme with comedy to highlight the fact that this is the reality. There were quite a few people who wrote quite scathing things, which included some swear words about the fact that this is the reality. But then we had more people who do understand the reality who then wrote back to those people and said, well, this is what it is. And then people calling it Ponzi schemes and all this kind of stuff. I mean, that's for them to debate. But I hope that by changing the name of a few things in finance, we actually get people to realise how things really work. So if you've listened to this piece and it's touched a nerve and you've got other things that really bug you and you wish people would view differently, or you don't like the way things are marketed, then send in comments or suggestions for other things that just a simple change of name could change the way people behave or interact with that service or product.